Hi, this is Vijay Bambwani here, and in this video, I want to basically address a query that I have received from a lot of my viewers who keep wondering and keep asking, what is this 360-degree worldview about the financial markets? They understand and accept the fact that what I have to say in my videos goes beyond the accepted parameters of analyzing balance sheets or documents or what is available in the public domain. I take into account a lot of things like geopolitics, the weather, the time of the year. This is the time of the year is something that weekly cash alert subscribers have been very clearly explained in that mini book that I have written, the weekly cash blueprint, which has been sent out to all the subscribers. I've split the entire year into 12 months and explained why and which commodity and which asset class will basically perform in what direction. So why do I do this, and what is the unique selling proposition or the USP of this system? Let's take the example of industrial metals. If you were to Google search, you would realize that 1/5 or roughly 20% of the industrial metals are consumed by China. 1/5 of the entire world's production of industrial metals are consumed by China. Now, do you think the Chinese Commerce or Industry Ministry will genuinely give you a forward guidance, which is something the analyst community loves? Do you think the Chinese Industry Minister will give a forward guidance every December and tell you how much more or less in terms of industrial metals the Chinese will import in the forthcoming year? You know, that's like giving out countries' national secrets. If the Chinese need more and they announce it to the world, you think the sellers won't rig up the prices? And if they were to admit that they will need less, the world will talk about an industrial slowdown in China. So rather than letting out information, it is actually in the interests of countries, companies, individuals, and listed entities not to give out information. Or for example, let's take the South American countries, which are the fairly large exporters of industrial metals. You think if any one country was to discover a new copper or a nickel or a aluminium mine, you think they would go to town tom-tomming about it and beating drums and saying, hey, we found 5 million tons of copper? They won't, because as soon as they announce it, the international prices of copper will come down and they'll make less money on exporting copper. So it actually is difficult to kind of ferret out the truth from out there, which is why you need to go beyond the accepted parameters. Think out of the box. Let me give you a small example. In the month of April 2018, the US President Donald Trump imposed economic sanctions on a Russian aluminium company called Rusal. It was the Russian aluminium exporting company. And it produced roughly between 7.5% to 9% of the global supply of aluminium. Now, once this news came out, it was accepted that aluminium prices would go up because 9% of the world's supply was likely to go out of the market. Or was it? So I did a little bit of back of the envelope calculation, and I also read up a lot in the international media. I made a few calls to my friends all over the place, like-minded risk takers, traders, and commodity buffs like myself. And I found that only the US and its allies, the British, the Germans, and the French, were going to respect that economic sanctions. The Chinese, the Soviet bloc countries, they basically were not likely to sanction Rusal or boycott its goods. And besides, it's only 9% of aluminium that the world produces. And aluminium is the most abundant base metal around there. The third most common element after oxygen and silicon. So it's not something that is absolutely rare. And guess what? The market actually priced up the aluminium levels from 120 rupees a kilo on the MCX to 180 plus in less than 2 weeks. Aluminium was hitting upper circuit after upper circuit. A circuit limit is a price band beyond which the exchange does not allow the price to either go up or come down. A whole lot of industry experts, including CEOs of metals and mining companies, were brought on television, and they were going about town telling people how aluminium would not stop below 225 rupees a kilo to 250, maybe even 275 rupees a kilo. Now this was frankly very surprising. It was time to bring the 360-degree worldview in play. So I went to Masjid Bandar. Now Masjid Bandar is a place in Mumbai on the central lines. Mumbai has basically Western Railway and Central Railway. So Masjid Bandar is on the Central Railroad network. And these are basically old world, messy places, very dusty. The roads are pretty badly maintained. There are huge warehouses and godowns where industrial metal scrap and metals in its raw form are kept in very large warehouses and godowns. Before you start to basically turn your nose up in the air and say, wow, that's not a place I want to go, let me update you on what Masjid Bandar, Dana Bandar, Darukhana and Ray Road are. These are suburbs on that stretch of the Central Railway line. Together as a market, they constitute Asia's second largest industrial metals market, including industrial metals scrap. You name a listed company which mines metals, and you will find their senior marketing and sales directors coming out in their fancy cars and trying to keep these guys, the godown owners, in good humor and buttering them up and telling them, buy some of more my output from my factories of steel, copper, aluminium, lead, nickel or zinc. Believe me, these guys are big and big. So I went to one of the bigger aluminium scrap metal merchants and I asked them what his view was, and he told me at 120 rupees a kilo, which was the price before Rusal was sanctioned, he was finding it difficult to sell aluminium. At 180 rupees, there were no buyers at all. And I asked him, what do you think? Will the price sustain? He kind of sneered and he said to me in Hindi, "Ye aluminium hai, chandi nahi," which means this is aluminium, it is not silver. It cannot maintain these prices. Now here you have a situation where the leading lights of the industry, the guys running the mining companies, the senior research analysts and the broking industry, etc., they were talking about aluminium shooting through the roof. And here is a very large scrap merchant who was telling you he was willing to bet his bottom dollar that there would be no sale taking place in aluminium at 180 because it was not likely to sustain. Guess what? In a couple of days, when I had a television interview in a leading media house's commodity show, I was telling the anchor all this during the commercial break, and he asked me whether I had the courage to sell. I took out my cell phone and said, look, let's not talk about courage. Here's my cell phone, here's my trading terminal. I'm going to short aluminium right in front of you. Because I trust this guy. I've been asking him inputs about aluminium when I was appearing on ET Now's commodity show, Hot Commodities, for 4 years or more. And I respect this man's view. He's one of the largest dealers of aluminium around there. And guess what? Aluminium collapsed the way it rose. Circuits down, double circuits down, two circuits down in 1 day. So it went from 120 to 185 plus and came all the way down to 120 again. What do you think works better, the conventional or the 360-degree approach? Let me ask you another question. I already asked you about whether the Chinese will tell you facts and figures about how much aluminium, nickel, lead, zinc they are likely to consume without upsetting the price. Or the South American countries that export these metals, would they tell you the truth? Let me ask you one more question. This is something that bullion analysts love doing. They quote numbers. India imported so many tons of gold through the customs, and the data is very easily available in the public domain. So the Indian demand for gold is up, or Indian demand for gold is down. I agree. Partly. Why partly? Because is this the only kind of gold that's available in the market? Why is it that you can go to Zaveri Bazaar and pay cash and buy gold off the record, what is known as do number, number 2, unofficial, black money, whatever? Why is it that you can buy gold and it doesn't appear in the books? It's meeting some demand, isn't it? There is a demand for it and it is being met. So this is also the market. It pays for you to notice what's happening in the parallel market also. This is not something that people are trained to think like in school or colleges, and yet this part of the market exists. Would you like to ignore it? I think not. Welcome to my 360-degree worldview of the financial markets, where we leave nothing to chance. If you saw this video on YouTube and you liked what you saw, click like on this video and subscribe to my YouTube channel. In the comment section, do let me know what you think about this video and what you would want me to record next. And help me spread the cult of 360-degree worldview of the financial markets by recommending this video to your family and friends. Do take very good care of yourself, your family, your trades, and your health. Have a very profitable day. Vijay Bambani signing off for now. Thank you for watching. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.